All right. What's up, everybody? Long time no stream, huh? Yeah, so there's a very intentional reason why I haven't streamed in a while. Let me turn this music down a bit. Mouse is... Of course, everything lost power tonight, so I'm charging the mouse. So it's hooked up to a wire right now. It's sort of annoying. Same with the headphones. But we'll live. We'll live. So yeah, like I was saying, there's a very intentional reason why my main monitor's messed up. Why I haven't streamed or put any videos out lately. Let me fix this. Oh, that's the wrong one. I want this. Yes. Sorry about that. Yeah, I won't really get into it, but yeah, I stepped away a little bit. Wanted to focus more on figuring this out, you know, being a student, being a better student than worrying about building a community. You know, the initial thought with building a community would be that have people to bounce ideas off of, hopefully help both parties while going through this learning journey. I basically found that people don't really want to learn. So I was pretty much the only person studying. It's fine. It's whatever. Doesn't really matter that much. Let me try to boost this mic a little bit. Let's put some mic boost on this shit. Alright, I'm gonna go to 10 decibels. Okay. I think that's should be fine. You know, might be too much, whatever. Hopefully you can hear the music. Bunch of bullshit. Just talking a bunch of bullshit right now. Let's talk about the purpose of this live stream tonight. So I used to do some Friday night backtesting, and I thought it was pretty fun. It was cool. You know, we'd go through the charts, try to find some ICT related setups or patterns or whatever. See how they played out, stuff like that. So it's going to be a little bit different. Throughout the last couple of months, I've had my ups and downs, as everyone has had. But there was one thing that I started to notice over and over and over, and it's, you know, I've studied, you know, I've stayed on the whole study grind. So that's probably influenced me a little bit. But one thing that I kept noticing, you know, people would always ask me, oh, what fair value gap matters? How do I know? Fair value gap's open all the time. How do I know which one matters? Because you'll see times where there's a fair value gap and price seems to not respect it at all, right? Like there's maybe a slight hesitation coming back into it, but for the most part it just glides right through. It's gone. Structure is not changed in any way. A lot of this comes down to like the current structure of the market, higher time frames, stuff like that. But I've also noticed that there is a common fair value gap that does have power, at least the first time. And a lot of times it has power more than the first time, but the first time especially, there seems to be a lot of power that comes from that fair value gap. And I don't know if the power really comes from the fair value gap. I think what I've found is it actually comes from the order block, right? I'm not an expert in these theories, order block theory, fair value gap theory. These are ICT theories. If you want more information, education about these theories, you want to go find his channel, Inner Circle Trader. All of his shit's free. This is the only reason why I'm here right now, is because he has provided this information for free, and I've tried my best to follow along and learn. So over the last couple months, I've put a couple things together, all right? And I've narrowed it down to what I think is my model. And that's what we're going to be talking about tonight. We're going to talk about the model that I'm going to try to trade off of. We are going to look for occurrences of this model and log the results. And we are going to add some rules, hopefully. Maybe add some qualifiers, disqualifiers, confluences, stuff like that. I've literally only traded this model, like solely this model, for a couple of days at this point. So very new. This is literally back testing session number 1 of this model. And I honestly think it's a great one. I don't think it's anything new, nothing groundbreaking. I'm sure a lot of people trade off of this type of setup, but it's new to me. So I'm gonna act like it's mine, even though these are very standard ICT setups. Okay, so I've put together a little Google sheet that we're going to be filling out. And the first thing I put together was a set of rules. Now let me get this up on the screen here. I want to add a window capture. Sheets. Make source visible, not yet, because I want to grab it first. Brave EXE, Brad's model, that's it. Okay. So we're going to take this. I'm going to put it down here, maybe up here, up here. Makes more sense. All right, hopefully you guys can see that, and it's clear. There are other tabs here that have more data. We're going to fill all that in. So I don't want to make it too, let's go 125. Hopefully you can see that. On my screen it's pretty small, but it's in a very small preview window. So anyway, let's go over the rules. Okay, this is quote unquote Brad's model, but it's not really. It's not original ideas. These are things I've put together from the teachings of ICT. So I'm trying to like balance taking credit, and there's no credit for this. All right, it's just something I've noticed, and hopefully it can help other people and bring consistency in my trading. Right, I've had some great weeks, great days. But also I feel very inconsistent. So a model is what I need. And this is going to be it. Let me full screen this bitch. 1 sec. Okay. So, rules. 15-minute time frame. First off, I'm going to be looking at ES. I have not. I've looked at it on NQ. Theoretically, NQ should work, right? I'm going to be focusing on ES for right now. I think we're going to probably go through times where NQ has a better structure and when ES has a better structure, right? So just keep that in mind. It's a fairly tight model. So if structure isn't great, you could run into some issues, but we'll figure that out. That's the whole point of this live stream. Okay, so 15-minute time frame. Displacement with a gap, fair value gap, through a swing high or swing low. All right, that's super critical. All right, so basically a market structure shift through a swing high or swing low. I mean, that's basically the definition of a market structure shift. Now, we can get more technical on that because just because you go through a swing high or swing low, it might not be a shift, right? It could just be some really small intermediate or very, very short time frame swing high or swing low. Like, I mean, you look at this like consolidation period here. We got swing high, swing low, swing high, swing low. Like we have it back and forth, back and forth. So you bust through one of those. I mean, this is what I want to figure out. How accurate that is when you're talking about something when you're in a consolidation period and you have a strong move, right? As you can see, we have a scenario right here that we'll get into that I think failed if we're talking about this model. Displacement through with a gap through the swing high and swing low. A retrace back to the swing high or swing low. Okay. So a lot of times I think people are looking for a retrace. Now, look at today, right? We had a beautiful setup here with this model. You see the swing high right here? That's the swing high that had the first retrace or first displacement. Then a retrace. Where did it go to? Exactly to the tick on this swing high, right? So a lot of people, especially if you follow ICT's 2022 model, are just looking for a retracement into a fair value gap. Now, you can expand on that a little bit and say, okay, maybe this is the range, right? Let's, I have a fib here that gives me the 50% line, the discount line, right? The optimal trade entry. Now this isn't ICT's, this is another guy's. This red one is something else too, which interesting, it hit right on that. But what ICT basically teaches is you want to come back into the fair value gap at least to this 50% line, because that's the point where it's in a discount. And you want to buy when price is in a discount. Okay. So I've basically expanded that a little bit to try to find optimal entry, right? And I've noticed a lot of times what it does is come back to the swing. Swing high, break, come back to that swing high, and then we take off. Okay. So that plus 1 tick. I'm going to go 1 tick off of that. Would be the perfect quote unquote entry, right? Now you might look at this one. Oh, we're still going through the rules, but you might look at this one and say, well, hold up. We got to swing high here. We got to swing high here. Right? Swing high, a little tiny swing high. It displays that. It displays this, and it displays that. Which one would I choose? Well, I think that's something I want to try to figure out first off. But my initial thoughts, without finding out the data, would be that you want to go for the swing high that is in discount and with the fair value gap that aligns with it. So you see this one, displacement, fair value gap, aligns really well with the swing high. Now this one, it's actually the same tick as this high, so it's not in the fair value gap, technically. I actually took this trade today, and I went in on this one. And the reason is because I am not very confident. That's really the reason. I mean, this was the second day I've been trading with solely this model. I've dropped everything else, and I'm only gonna trade on this model. So I'm a little nervous about the rules, and that's why I'm doing this backtesting session, to try to ratchet down the rules a little bit. Ended up that this one is the perfect entry, but we'll go over these examples. Let's get back to the rules. So retrace back to the swing high or low. Now when we talk about targets, the low hanging fruit target, which is all I've been taking this week, this last couple of days, would be to come back to the displacement candle high or low. Now, that's actually not super correct. I would series, I'll say displacement slash retracement candle series high or low. Now that's a little vague, I guess. But what I mean by this is, you know, the high of this action, right? So we've come up, we've rounded over, we've retraced back, bing. Low hanging fruit, I believe, would be this swing high right here. So it'd be 41.71.75, I think, on this one right there. Yep. And clearly we got there. So yeah, that would be low hanging fruit. Just basically, just pierce the range, right? Like we want it to make some kind of progress in that direction. Could be one tick. That's fine. That's low hanging fruit, right? Now, I'm not going to tell you how to structure trades. I'm just going to tell you what I would consider low hanging fruit and what I would consider the next targets, right? So the targets after that, I don't have in the rules, but the low hanging fruit is really the important rule other than the stop loss, and I did not put the stop loss in the rules, so I'll put that in there. The other targets will be your liquidity targets, right? So for today, it would be this high, would be the next one, and then what, like this high, this these equal highs here, maybe this one, and then this, right? We ended up, oh, we didn't pierce that, huh? I'm sure we'll take that Monday. Yeah, we're pretty much past the order blocks here, so we're gonna take this shit, pretty sure. Either way, we're talking about the model here. So low-hanging fruit, other targets, and we'll talk about confluences that can give you more confidence and, hey, what should I take off at low-hanging fruit? Should I expect higher targets? Stuff like that. We'll talk about that stuff when we go through examples. Stop loss. I currently think stop loss should be at the closest swing high or low, right? So of the retrace from the displacement, right? So stop loss would be down here under this range. Now you could, for this one, since we have a double push, right? You could get ultra conservative and put it under this swing low. But I think for the model, the rules should be under the displacement, the original displacement candle. This can get a little tricky because sometimes it can be crazy, like far away, very, very far away. And it's sketch as fuck, right? But I think the model should be very strong. So, yeah, you know, stop losses are tough. Stop losses are very tough because you know, I watched a video where there was an institutional player talking about, you know, what they do, how they trade. And it's a dumb saying, like, it's one of those things you're like, well, no fucking shit, dude. But he was talking about stop losses and how that's really where retail traders or, you know, typical day traders make most of their mistakes, is that they put their stop losses in a place where institutional order flow is gonna take. Like, they know you're gonna put your stop loss there, right? So his message was the stop loss needs to be where the stop loss needs to be, right? Sometimes on these plays, the stop loss is very far away. And I think that's one downside of this model. When you're working on the 15-minute, these candles can be brutal. They can be very large. So your stop loss could also be very far away, right? So let's imagine we have a scenario where the candles are this big, right? Like we have one here that is from 91 to 05. And this isn't even extremely volatile. Like, we're talking 20 handle candles on a 15-minute. There have been times where I've seen it be 30, 40 handles, right? Who can take a 40 handle stop loss? I don't know. I mean, you're not, most of the time you're not going to be, or I think probably all the time, you're not going to be having it be the whole candle. You're going to be down here somewhere. So it's going to be like half of that, right? At least half of that if you're talking about getting back into a discount. But you get my point. The stop losses can be a little brutal, but if the model is sound, it should wash out, right? You should still be making a lot of money with your winners, where you can take a couple of wouldn't say heavy losses, but losses that are uncomfortable, right? I think most of your losses won't be that uncomfortable. And we can try to refine that stop loss strategy. I think most of the time when this doesn't work, the stop loss is fairly close. Blabbing about stuff. Sorry, guys. Let's get back to the rules. Let's write the stop loss rule down. Stop loss is at is 1 tick from original displacement candle bottom / top, right? So depending on which way you're going, it'll be the bottom or the top. So for this one, 1 tick off of this candle, we could put it right there. We could be a little safer and put it under this whole range. But I mean, let's be honest, right? So if we're talking stop loss, if you're doing this and you put your stop loss 1 tick under here, right? So 1 tick under 41.52. So 41.51.75, which is exactly what these are at, right? Oh, actually, it's right below it, or right above it, because that's 50. There's 2 ticks in there. If it takes 1 tick below here, it's probably going to take that too, right? Now, we'll go see examples, but if it hasn't come down here and reacted off the order block, and maybe we call something like mean threshold. The only problem is when you're talking about wicks, they can wick through this shit and still fulfill the model, right? So we gotta figure out the numbers. But I would go 1 tick under displacement candle, because if it takes that, it's probably gonna take this, and you're gonna save a couple bucks. All right. There are gonna be confluences that we talk about, but I think one big confluence. I have both of these together. I want to talk about this one first. I think one big confluence is the fair value gap being aligned with the swing. Okay. I think this is very important. Now, I have seen this setup work with just the swing. Now, I call it the swing. It's basically the order block, right? But I like to use the wick. Whereas, yeah, I mean, it's a little subjective sometimes. I know ICT will probably say, no, it's not. You guys just don't understand. That's true. I just don't understand it well enough. I like just taking the wick. Okay. When it comes back down into that, that's when that aligned with the fair value gap is like the fucking nuts, man. So that confluence, I think, is very important. But yeah, I've seen it come down where the fair value gap is maybe above, right? Could the fair value gap be above? Yes. Because this could still be a swing high. Let's say the swing high is here. And then this candle comes up above it. Yeah, it's really weird because would that be a displacement through the swing? I don't know. The swing high could be lower, right? Okay, I'm just sorry, I'm trying to think about this. we got to get into some examples because these rules, these confluences, the swing high being inside the fair value gap, I mean, the swing being in the fair value gap is definitely something that I look for. I'm still on the fence whether the gap not aligning with the swing is still playable. Like, still something I want to play. I'm sure it's playable with some degree of accuracy, but I don't know if I want to play it. So we'll figure that out. So we are half hour in, and we haven't done the back testing yet, but let's get down to that now. My streams last forever. I always drone on about stuff. You're going to have to get used to that. I apologize. But let's talk about the setup of this spreadsheet here. All right. Try to make it a little bigger without taking up too much of the screen. All right, so I'm going to tweak this a little bit, but I set up a little spreadsheet for this as well. What we're going to do is log the displacement candle, date and time, the entry candle, so the retracement back into the fair value gap or whatnot. When that happened, date and time. The entries, this is going to be the price, right? The price of entry for early and for full. The targets, this includes stop loss. What is our stop loss price? Low hanging fruit price, first target, and home run is like, you know, like today. Like if it just goes and fucking sweeps up everything, what would we look at? What is reasonable to look at, right? I don't think this is reasonable at all. But we'll get into that with the first example. Confluences, whether they have these certain confluences supporting a higher time frame bias. I think that's pretty important, but we'll see some examples where it's not, because I traded some examples where it's not this week. Fair value gap on the swing, like we talked about. Having the fair value gap and the swing aligning with each other. If that's the case, we'll check that off. Having a higher time frame order block. This one is one I thought about today, because today, this little move here also happened on the 1 hour. All right. Now, if you see up top left of my screen here, you'll see the time frames that I care about. You will not see a 30-minute time frame. And you might ask, why are these the time frames that I care about? And I don't have a great answer for it other than this is what ICT tells us to look at in his mentorship. I've seen people trade with the 30-minute. I honestly haven't paid it much attention. And if anyone has any insight on what that could help, please let me know. But I feel like the 1 hour, I honestly feel like 1 hour and 15-minute is like the fucking best, right? The 1 hour gives you a strong indication of the direction of the market. All right. The 15-minute, you can have runs against the direction of the market, the general direction of the market, right? 1 hour, it's very tough to have a 1 hour run that is against the direction of the market, that has like a shift in structure, right? And we'll go into that, but when I'm talking about a higher time frame order block, I'm talking about the 1 hour on this. With this model, this 15-minute model, I'm talking about the 1 hour. When I say supports a higher time frame bias, I'm talking about the 1 hour. Okay. Now, you can have moments of retracement on the 1 hour. That for sure can happen. It happened with this latest drop down, and now we're back shifted on the 1 hour. We're shifted on the 1 hour back to a bullish structure, right? So I follow that as my sense of the market structure currently. Last one on the confluences so far. I want to build this list a little bit from a turtle soup. Now, you guys might not be familiar with a turtle soup. So if that's the case, let me explain. A turtle soup basically is a raid of a higher time frame, and I like to find them on the much higher time frame sweeps of liquidity, right? So, you know, before I was talking 15-minute, the higher time frame look is the 1 hour, right? For a turtle soup, I honestly want to see a daily or weekly sweep for me to say that's an actual like from a turtle soup, right? So what I'm usually looking at is previous high a day, previous low a day, right? Previous high a day, previous low a day, equal highs, equal lows on the daily. And if it's on the weekly, it's just like more power, right? It's more strength. But that's from turtle soup means we just hit a very, very, very valuable pool of liquidity. And now we're in a potential market structure shift to the other side. Okay. We had that in this area Wednesday. When we finished the run down, we swept a very high value area of liquidity. Okay, all of these equal lows. We dipped into the order blocks over here. I actually was expecting a little bit more, so a little surprised, but we'll get into that later. But I think this is sufficient to say this would be from a turtle soup. If you found an entry here, that would be from a turtle soup. Okay. Here, not so much. Now you could say, oh, we just rated low. But look at all this shit. Look at all this shit over here. You can't say this raid of this low is a turtle soup. It's bullshit. You would have to raid this. You would have to raid this low. That is a maybe a long-term low, I guess. Intermediate term low, short-term low, intermediate, short, right? Intermediate lows. Anyway, if any of this is going over your head, feel free to join the Discord and ask as many questions as you want. I will do my best to answer them. I am not an expert, but I want to learn. So the more people ask me questions, the more I have to research, the better I get. So bring it on. And then last but not least, the final price result. Now, I'm going to call this the higher low, the extreme higher low, before we kind of break structure again. So for today, it would be this high. I mean, it never broke this trend, right? For other ones, it's literally low-hanging fruit was it. That's all we got. So we'll log that. We'll see, based on that, did we hit our targets, right? Did we get stopped out? Probably. on some of them. I believe we were pretty perfect, though, on stuff in New York. And that's another thing you want to keep in mind with this. I've only traded this in New York session. And I think some of the Asia and London stuff can fail on this. Once I've finished putting this model together, I'm going to work on a 5-minute version, and hopefully that can provide some other entries that aren't as New York specific, I guess, as this one. Okay, so let's go backwards in time through our examples. Okay, so remember what we're looking for. We're looking for 15-minute time frame displacement with gap through swing high, swing low, retrace back. Okay, so the first one we have, if we're going backwards in time, is this one. Right? That's a swing high. That's a displacement through the swing high. That's a fair value gap on the swing high. I mean, it's not inside it. Maybe, because it's literally the same as the top of the fair value gap. And then we have a retracement back. Now, it's not this one because this candle does not count. This is another thing I have to think about and see if we want to include this candle, right? So the third candle in the series, right? Now we have a fair value gap here, but that's not on a swing high. This is the one. So it's these three candles that form the gap. This candle isn't in play, in my opinion. Right? Let me make this a little bigger for you guys. This 1445 candle, until it's closed, we don't have the gap, because this candle could come right back down and close it up before it closes, and you have no gap. So I don't count this. We have an expansion even further. We come back down. That's where we tag it, right? This candle right here, 1515, 315 today. Now this is late. This is very late, and we're already very high, and this is a bullish setup. Okay, but it fits the model. Let's write it down. So our displacement candle was 1430 on this is 526. Oh, 526. Oh shit. Oh, 526 2023. What did I say it was? 1430. 1430 was the time. Our entry candle was 1515 of 526. Oh, 526 2023. 1515. Okay. Entries. We only have one entry on this one. We don't have an early and then a full entry. So this is going to be the same. It's going to be the high of this candle. High of this candle is 421375. Okay, so 4213.75. We can carry this over to full entry because it's the same. Our stop loss would be the song made me think there was a fucking, my dog got out or something. One tick below this, yeah? Now this is where I have an issue already. First example. I think I would put it under this swing. Now, reason being, that is actually what started this move. Now, This is a red candle, sure. This is a red candle. But it came down and started coming up and continued. Okay, so I'm going to put it under here. So that's 420375 is 1 tick below. 4203.75. So we'll figure out things like risk to reward, all that stuff from this. Now, low hanging fruit. The low hanging fruit on this is pretty weak, I gotta say. Now, according to the rules, low hanging fruit would be this candle, correct? This displacement? No, it's the series. It's the series. So I would go back up to here. I would look for this high, 422125, all right? So we look at that, 4221.25. So our potential here is 7.5 handles, right? 7.5 handles. It's pretty good. But our risk here is what? 10 handles? So think about that, okay? The risk to reward on the low-hanging fruit is pretty weak. It's very weak. A lot of people would say, oh my God, you're going to have a under 1R trade? Yeah. Yeah, I would. Because I'm so fucking confident that it's not going to get close to that. That's like so conservative. It could. It could do it, but I'm so confident in this scenario that it's not going to get past the order block. I'm willing to take it. Now, the wicks are the tough thing, because you can say, well, if you're so confident it's not going to get past the order block, why don't you just set it to the low of the order block, right? Right here. This is the order block. Why don't you set it, you know, I mean, this is where it gets tricky. Where's the order block? I'm taking the swing low. It's a long stop loss. I know. It's tough. Trading's hard. But I would rather take my L's that way than miss out because I was stopped early. I think you're going to miss out on a lot of gains because you're stopped early, because you're being too much of a wuss about your stop loss. All right. You need to put your stop loss where it needs to be. All right. What are the next targets? Right, so we're talking about this as the target, right? So let's start putting some horizontal lines on here. So the next target after that would be this one. Ooh, oops. Sorry, it would be this one. 422275. So not much better. One more handle, a little over. And then, you know, this is a big mess. I think you grab this as your last target, yeah. If you're coming up through here, you've already passed so many order blocks. It's coming up here, man. It depends on the time. Oh, sorry, you guys can't see that. It depends on the time, but if you're coming up through here, you're gonna tag that. Pretty sure you're gonna tag that. Now, I would go one tick down. So 4227.25 is your home run. 25. Sorry, 422725 is the home run target. Now this one we're already like super high up, right? There's like nothing else. I know one thing there is. 4244, baby. This thing I've been watching forever. We're in December now, so yeah, I'm not gonna worry about it. This is the continuous contract, by the way, so we do have a little bit of inconsistencies versus looking at like ESM. Oh, Jesus Christ, look at me. Didn't even notice. Okay, so that's our first example. All right. The problem with this example is it didn't finish. This happened on Friday. 445 hit, and we hadn't hit our low-hanging fruit yet. So that's tough. But let's look at confluences. Fair value gap on swing. Yes. We'll just put it X. Higher time frame order block. I don't believe that's the case. From Turtle Soup, definitely not. Higher time frame order block, I doubt it. Yeah, in the higher time frame, I mean, we're just like in this thing. Higher time frame order block would be if it like the one this morning. It was a higher time frame order block. So I would say that's a no. Supports higher time frame bias. That is definitely true. We are in a shift of market structure. Clearly in a shift of market structure. The shift of market structure actually started right here. All right. This swing, this shift, and we keep going. Okay. On the 1 hour. So supports higher time frame bias. Correct. I'm gonna just freaking make all these centered. Okay, so we are almost an hour in, and I've only gotten through one example. Fucking awesome. Sounds like one of my streams, huh? All right, next example. We're just looking for any displacement. You guys won't fucking believe this. Look at that. Now, this is where I missed this. Real time, I missed this. Because you know what I was looking at today? This. I was looking at this structure right here. I see the displacement, comes back into a fair value gap. Beautiful. Keeps moving, right? What does this displacement do? It tags a swing high. See that? All the way over there. All the way over there. Now we're not going to use a horizontal line. We're going to use a ray for that. That's fucking beautiful. That is beautiful. That is flippin' beautiful, guys. Okay. So the weird thing about this one. Oh, did it just tag? Okay, low 41.96. It just tagged discount price. That's what I was looking for. The order block is the key, but it also, you see how it tread just, you know, uncomfortably through that swing high. Has to get the discount, guys. Has to get the discount. From that expansion, it hits right on discount. That's fucking beautiful. Okay. So this is our other example. I missed this today. It's beautiful. 10:15. 10:15 in the morning. Amazing. So we'll copy this date here. It's going to be the same. Our displacement candle is 10:15. Okay. So one thing. Shit. Sorry. So one thing I need to track is our swing candle. Our swing candle that we're targeting. Damn. Alright, we're gonna have to carry this on through multiple days. I think I'm gonna have to do this every night for like an hour to fill this thing out because I'm already getting tired and I've only gotten through one example. But this is brilliant. This is brilliant right here. We have the swing high there. So we'll go ahead and fill out what we got. The entry candle will be 11:15. So you have a whole hour. Just chilling. Don't worry. Fucking take it easy, man. You had a displacement. Candles are dicking around. It comes back. Oh, sorry. It was actually 11 o'clock. 11:15 went down a little bit further, but 11 o'clock was the initial entry. Okay. Where is our entry? Early entry. Yeah. I think we actually do have 2 potential entries on this one. Because we could take these highs. It's like a little swing high, but this one like trumps it. And then this is that a swing high? They're equal. I don't know. I don't think so. I'm going to call the entry 41.98.50. Okay. Full entry. I mean, you could take it down there, but I'm going to go with the same thing. Now, our targets. Stop loss target. What is our rule on stop loss target? Stop loss target would be the displacement low. Okay, now this is where I say it can get crazy. We're in a very, very, very big displacement. So it would be here. 41.82. So at this point, you're talking about a 16 and a half handle displacement or stop loss. Pretty nutty. Pretty nutty. This is how confident I am. This is how confident I am in this model. Okay. Sorry. Low-hanging fruits is 421175. 421175. So we're talking about a 13.25 handle. Sorry, 13.25 handle. Low-hanging fruit. And then first target would be, let's see, above that. I mean, I would honestly say first target is this big boy here, 422275. And the home run, I mean, we can go the same thing, 422725, right? So once again, risk and reward sort of tough on it, but I don't think it's about that. I think it's about the strength of the model and putting your stop loss where your stop loss needs to be. This entry is going to give you much better risk reward, obviously. These other ones are a little tough, but if there's a high probability of them working, then the fuck you worried about? You're gonna take a loss every now and then. It's okay. You take a fucking 10 handle loss. You just ate 50 handles before that 10 handle loss. So who's winning, right? Sports higher time frame bias, correct. Fair value gap on swing, correct. That's the only time that works, to be honest. I honestly think that's just going to be an ironclad rule of this model, is that the fair value gap has to be on the swing. So if it's not, it's just like, what's the fucking point, you know? Is that really the model? That's just an order block. A higher time frame order block, you know, that's a great question. I don't think it is, but let's see. So here's our swing. Yeah, it fucking is, right? Yeah, it is. That's a higher time frame order block for sure. What the hell? Why is another? From Turtle Soup? No. Not from Turtle Soup. Okay. Final price. Oh, I really hesitate to answer that question when it hasn't finished yet. So I'm gonna put NA on these because they haven't really finished. We haven't gotten out of today, guys. And it's 11:30. So I'm gonna wrap this up. Look, I know the main thing on this stream was just talking about the model and what it means and what the rules are. We didn't get too much backtesting in. But we'll get there. I'll keep doing these streams so that we can backtest and prove this model. I'm gonna trade on this model for the next however long it takes. You know. I think it's fucking golden. Anyway, yeah, I'll take that one. This one. This just took off. Anyway, I hope you enjoyed. You know, one day I would like to finalize this model, and then I can put out a video summarizing some of this stuff. But you know, we're in the beginning stages of this. I hope you can get some extra knowledge from hearing my thoughts and my ideas as I'm going through this. I know for me, it really helps to talk about it, even if there's no one really listening. It's good to vocalize it, to like professionalize it, you know what I mean? Take it more seriously, because this is a very serious thing. And this is the point of my streams where I start talking real shit, real talk time, whatever it is. It's important. And You know, I know ICT talks about this shit all the time, and I love his motivational stuff, man. Like that probably hooked me even more. I'm not gonna say more than his teachings. His teachings were everything. Like that's what got me thinking that this is possible. You know, it changed my. It was a complete paradigm shift, right? Changed my whole idea of what trading was. But his motivational stuff is very helpful. And, you know, I'm probably going to parrot a lot of the shit that he says. Hopefully put my own kind of twist on it. And hopefully people get something from the way that I say it. But, yeah, this is serious, man. So taking it seriously, even if you're sort of going through the motions, think what would you do if this was your livelihood, right? Like this is what you want, right? This is what I want. I want this to be how I build the future for my family. So why would I fuck around? Why would I fuck around with that, right? Like if this is your path to getting out of the endless struggle that most deal with and getting your family out of that for generations and you could literally be setting your name up for ever. Like, you think the Habsburgs thought that they were the Habsburgs when they first started out on this shit, right? Like, the big names that you know, the big successful families, they had one ambitious person or group, or hopefully it was a team effort and it wasn't just one person willing it, but there was one starting group that decided, I'm gonna change everything, right? Like, I am going to change our destiny. And that's the potential that we have here. It really is. I fully believe that. And that's what I strive for. And if you're striving for that, then why would you treat it like it's a fucking elective class in high school that you just had to take to graduate, and you're just going through the motions like, oh, you know, just have to be here for the credit, you know, just getting the credit. Yeah, maybe I'll learn a thing or two. You gotta take this shit seriously. But yeah, hopefully you enjoyed. Sorry that I fucking ramble about shit. But this is for myself as much as it is for you guys. Probably more than it is for you guys, but it gets me pumped up, you know? Anyway, enjoy your evening, enjoy your weekend. I will do some more of these so we can go through some more examples, because I fucking sucked at the whole backtesting part of this stream. Mainly talked about the rules and what this model was, which is, I'm sure, the same as a lot of other people's models, but this one's mine, so I'm calling it mine. Whatever. Have a good night. Talk to you later. Bye.